Good morning and welcome to today's edition of the London Session Open. Today is March 25th, 2020, and it's 10 minutes until 10 a.m. in London. We're going to be a bit brief today because we started a little bit late, but we're going to try to cover all the markets. If you are regular of this, you know what's going to happen next, but if you're not, then we're going to take a look at euro dollar, pound dollar, dollar yen, crude oil prices, gold, DAX, and the S&P 500. We're also going to talk a bit about what's happening in the world. Okay, so what's the big move that happened in the markets lately? Well, it's stimulus in form of $2 trillion from the US. The US GDP is about 21 trillion. So we're looking at almost some 9% of the stimulus to the economy. That's a big deal. And what more? This is, I think, the third package they have already introduced. So I don't know exactly what the total is, but we're looking at some significant numbers here of GDP. And as we know, they're going to hand out money as well. So they're doing everything to try to support the economy. As well, the Federal Reserve have said that they're going to buy unlimited amount of treasury bonds over the last few days. As well, they're borrowing out unlimited amounts of dollars to the world. So we're seeing as well the dollar softening and stock markets up. And in particular in places like Germany, and also have Spain, we have Italy, even Southeast Asia, and many places in the world, we're seeing back to a bounce in the markets. And as I said before, I thought from a longer term perspective, you know, I said that, you know, buying here and continuing to buy is going to be good, I think, and I'll continue to insist on that. Of course, the markets have declined a lot. So traditionally, when the markets decline with more than 20%, it takes up to 2 years for them to retake those highs. And if we indeed have a proper recession, then things are not going to look so good. And of course, if the coronavirus for example, in China, they let people out now, they can go back to work. But when the full population is back working, you know, there's nothing that says that we might not have a resumption of coronavirus cases. But if you look at in China right now, they have 47 new cases, but what the Chinese do good is that they will measure your temperature when you walk into a building, into a shop. And I think as well, I don't know everything, but apparently you need to log your temperature and stuff like that on your phone. So they're keeping a very good control there to make sure that things don't spread. And if you look at active cases in China right now, there's 4,287 from being 81,000. I mean, the total is still 81,218, but number of active cases are actually quite low. As well as, you know, from before, Italy is having a low growth of higher cases. And let me see if I can show you that. So this is the growth, daily percentage growth, and you can see how the second reading here from yesterday, so 8.2% growth. The day before that was 8.1. So the Chinese are showing how you can control it. You have the Italians as well doing it, showing here how it's possible to do it. Of course, the death rate is picking up, and that will pick up. So the market is trading mostly on the number of new cases and not necessarily on the death, because you get all these people. Now this is like a 10% move right now, but you still have that, and then a fraction of this is going to die. So that's why this number is many times more important, unless of course the death rate will be vastly different, which obviously here is very high. Like if you just look at in a totals number for China, the death rate is very different. You got 3,281 over 81,200 like that. So you got death rate of 4% in China. And then in Italy, you got 6820 over 69,176. That's at 9.8% death rate. What's also quite interesting is actually that the Chinese would only log people with serious illness, like not critical, but with serious, like you have the virus and you show symptoms. Whereas Italy, as far as I understand, they record for like people that are not even necessarily showing symptoms. So this is definitely a bit of alarming, these numbers. But again, that's not what the market is trading on. So let's talk a bit about the German DAX then. Okay, so this is the German DAX. And yesterday we said you can buy on the breakout for this to go up, or we can buy on a pullback. Now yesterday was pretty much just the German DAX that was bullish and the S&P was not bullish, but following today the Nasdaq ended its downtrend, the Russell 2000 ended its downtrend, and the S&P 500 is very close to end this downtrend as well. And not only that, you have Spain, Eurostock 600, and Italy all going upwards. You have Aussie dollar going upwards as well. So you're seeing a big move across many different markets, which lets me know, or it makes me think that because of the correlation that we can actually see further gains in the days ahead. Now, in regards to the German DAX, the best opportunity to buy was yesterday. So it's a bit too late now. There was the buy here, book profits up here. So in the very short term, if you're sort of a scalping type of guy, then maybe you can work with 9808, 9508, maybe let it go down a bit and then let it go up. Personally, for me, this is way too short term. I don't like to get involved with stuff like that. If I would, someone said, okay, you need to trade this, you need to have a position on, then I would say, okay, let's wait for maybe a stronger pullback to 9,167 and maybe try to buy here with a stop at 8,609. I would prefer that move instead of trading that one. But here's the US, the S&P 500. And S&P 500 has not taken out its high yet, but you have the Russell 2000 being bullish already. You have the Nasdaq as well being bullish already. So I think it's just a matter of time before the S&P 500 takes out its high. Now, if you're still short on the basis of what we talked about yesterday, then what I would just do is just going to remain short, because sometimes things do not develop. And so we're technically still below 25,010, and I think we may come down maybe a little bit. And there's different setups here. So my view is this: when we take that out, this is going to be my trend defining level. But for now, we're still below this one. So if one is still short, this is the level to watch. And we can still technically go down. Maybe you're going to create a right shoulder here of an inverse head and shoulders. Maybe the number of virus cases in the US are going to pick up and it's going to go totally crazy there. Who knows? There's so many things that can happen. But for now, at least the charts are telling us we're moving really close towards resistance and taking out that. So if we do take it out, I'm going to be bullish from this point. We might go up. Is it going to be like the German DAX, up and up and up and up and up? No one really knows, because it could be just up and then down and then up again. So that's why this is going to be my trend defining level. But long story short, take out this high, we're probably going to go upwards. What else? Let's focus on gold, right? So this is gold. So a few days ago, we said look to buy here, and then we said look to book profits here. That went well. Now the market is moved up higher without really pulling back enough for us to be able to buy. And we're starting to reach these highs. But the market is bullish. The dollar overall is giving back profits against many different markets. So I think we could potentially have a little bit of a push to the upside. Now, when I did this analysis, it wasn't this strong. But I'm going to lift this a little bit, and then going to look at 1,600. If it goes down, might be bullish from here, and then attack the high again and maybe a little bit higher. But then if we start to approach these levels, unless we have had a strong correction, I will just get out of it. Crude oil. Crude oil for now remains bearish, and there's no real change to the outlook here. The idea is to remain bearish below between 26.51 and 28.60, and I'm gonna just stick with that, and then we're gonna target the downside here. Currencies though, so what's going on here then? So currencies, the situation here is a little bit different. We have like a double top here and double bottom, and we took out that level here, which makes things a little bit bullish. But I'm also bullish because the New Zealand dollar is really close to take out its trend defining level. The Aussie dollar is also, actually the Aussie dollar already turned bullish. So that's sort of telling me a bit that maybe this is going to go up as well. So for now, I'm going to be bullish. Of course, it's not the best opportunities. I think the better opportunities are in stock markets. And that's why I'm actually covering some currencies at the end. And I think if we go down a bit, we can probably go upwards towards maybe these levels up here at 10,028. And I'm going to be bullish above 106.37 by now. But if we take out that high, then that trend defining level is going to be down here. GBP versus USD. So this one actually just turned bullish as we're speaking. So we took out that level, and this is no longer bearish. So this whole thing tumbled, people saying, and myself included, you got head Brexit negotiator, he's out of commission, I mean, he's got the virus. You also have David Frost from the UK delegation that also got the virus. So, and PM Johnson every evening doing a press conference. I'm sure they're doing the same in Italy and in France and Spain. So everybody's sort of super busy. So obviously, we're not going to talk about a trade agreement, and that's why the whole thing tumbled. But now things are starting to stabilize, and what's going to happen now is that this down here is the new trend defining level. As we start creating lower and lower and lower highs, the question is now what's going to happen next. So we're here now, and normally this was a swift and vicious drop, and normally, you know, we spend a bit of time here, but normally we'll have maybe a correction to the first fib. So that would be 20.90 and then 1.23 at a later stage. And we can reach those levels if things really just go back to normal, which probably is not going to happen. But for now, at least, I'm going to be bullish. And there are different ways. So we just got stopped out. So that little stop level, that is your entry, really. So that is what I would be focusing on. So I will look for something like that. And then like that. Okay, we're going to look now at the dollar yen. And the dollar yen is up here at resistance, and we're using an Andrews pitchfork. This does not make perfect sense along with what's happening in the other markets, because if stock markets indeed go higher, then this one also should go higher. But I'm going to stick with this view for now. So I'm going to remain bearish between 111.70 and 112.46, and we might go a little bit lower. Okay, guys, I see there's some good mornings here, so I'm gonna say good morning to you guys at least. So we have let me see here. We have Ugo. Good morning. We have Antonio. We have Nikos. We have Marvin. Good morning to you, and we have Maurizio as well. So we have quite a lot of people here. I really enjoy this. I hope you all doing good. I, however, need to rush now because people are want me to join a call. So we're gonna wrap things up. Hopefully tomorrow we'll be live around 9:30, and we'll have our half an hour. It's gonna be like this because of the situation we have with the virus. So at 10 a.m. I have a meeting every day. Okay, guys. I'll see you guys tomorrow. I hope you enjoyed the market update. If you have any questions or so, don't forget you can reach out to me via Skype at AlexFX00. Have a great day. Bye bye.